Hi. Well, thanks. Thanks very much for having me here, and I hope that the forecast that you got was better than the forecast you're going to get, because this forecast is completely flaky. There's sort of a disclaimer on this that, if you use enough statistical manipulation, you can actually build a projection of what the world is going to look like in the year 2050. And it just seemed like a catchy title, 2050 hindsight. And so the reason I developed this was, oh, by the way, I should explain this is a podcast thing. It's not a defibrillator. It may look a little alarming, but if any of you feel uncomfortable during the talk, why, I'll just try holding it to your shoulder and see if it revives you. I don't know. Well, anyway, hopefully I got it turned on, and I'll put it away in my pocket. I have been, for the last 25 years, exposed to the emerging markets. Well, let's say the third world. No, they don't like that. Emerging markets is a much nicer terminology to use. The problem with emerging markets is, when I started was actually with a trip to China in 1987, they weren't really emerging much at the time. And since then, we've seen huge progress in many of them, the BRICS, for example, but some others really haven't fulfilled their name. Perhaps you could say that maybe the Philippines or Indonesia have been a little bit disappointing. Beyond that group, there is a group called the frontier. And that term was coined by the International Finance Corp. And it was basically a group of 21 countries. The group is actually 60 or so. The definition that I use is any country that's not in the MSCI Emerging Markets Club, if you will. And lo and behold, we just inherited into the frontier Argentina and Pakistan. And some years back, Venezuela was kicked out of emerging markets, and Sri Lanka as well. And I expect Greece will arrive in the frontier before long. So we're eagerly awaiting that. But the story of this talk is that I have a talk I give about frontier. Frontier is neglected. It's great quality, similar to that of emerging countries, because some places like Mauritius are almost totally developed, and so is Slovenia, and others aren't so bad, and even Zimbabwe is a good place to visit. We have at least a representative here from Zimbabwe, and he'll vouch for it. And also, I have a picture up here, which I took from a microlight. How many of you have flown in a microlight? Show of hands. Okay, you're all much more sane than I am. So here I am investing in frontier markets and flying around in microlights, which is similar to flying on a toilet seat with a lawnmower engine behind you, and fortunately a pilot in front of you holding this bar to steer the thing. And that's where I took that picture of the Victoria Falls. But my travels took me to Argentina on behalf of the CFA, which decided to have me go and give a talk to the society in Argentina. And I realized that since they had been kicked out of emerging markets, I couldn't exactly give them this rah-rah talk about how great frontier is. They'd rather not be there. So I came up with another perspective, which is to say, let's try to imagine that it's the year 2050, and we're all here. That would be a miracle, but a wonderful one indeed. We're all here, and we have some alcoholic beverages come in, and we all talk about what it was like getting from 2013 to 2050. So that's the heart of this talk, and it's founded on really three growth drivers, which are not unique to me, but there are others who've done work like this. HSBC did a report, for example. If you look at demographics, a lot of the future is already written. Then you can look at investment flows and get another idea of what's going to be happening. And finally, you can look at government. Some places, government is likely to change. Zimbabwe is one of them. China, 50 years ago, was another. Iron Curtain, Russia, who would have imagined all of that? But then down at the bottom, you can barely see because the screen is positioned kind of low, but there is culture. And I think that says a lot that I can't quantify, and you'll have to pass your own judgments on culture, because anything I say would not be politically correct, and I don't want to go into that territory. But let's move forward with a view of the world that is unfortunately common on the part of many of our clients. Most CFAs have progressed beyond this. Now, if you notice, there is a misspelling on this. It should be moose heads in Canada, not mouse heads. But when you think about it, you know, asset allocation these days is distinctly antediluvian. And most people have most of their money in the US. And yet, when you look at the distribution of the world's GDP on the left, you can see that emerging in red and frontier in blue account for about a third. And by the projections that are irrefutable, as I explained, we'll get to the 2050 projections later, half the world is going to be what we consider now to be developing countries. And the same with market capitalization. So if you were a naive investor today, you would put roughly a third of your portfolios into frontier and emerging countries. How many of you do have a third of your portfolios in frontier and emerging countries today? Show of hands. All right, I'm not alone. Thank you. So how many of you have 50%? All right. Well, why don't you take over from here, and you could give more of this talk with more conviction, because you see, I'm talking my own book. I'm managing Frontier, you know, and people say, oh yeah, you know, we don't believe him. But you have credibility in the space. So anyone wants the real story, you know who to go to. Before we start our journey, some of the younger members may need coaching on how difficult it is to remember as far back as we are now trying to go forward. So if you do remember when the first barcode came out, when Blazing Saddles was at the movie theaters, when the Mustang II was out and Muhammad Ali was doing, let's see, yeah, George Foreman was on the losing side of that one. So the fact is, between then and now, a lot can happen. Here are a few of the things that can happen, or rather I should say did happen in the recent past, that will, you know, make our forecasts of the future certainly hazy. I mean, who could have imagined the global impact of Viagra, let alone Prozac? Or for that matter, we've got things like the iPods and the spreadsheet. The spreadsheet, you know, VisiCalc didn't exist in the early 1970s. So obviously a lot is going to happen between now and then. Another thing is that from the early 70s, one of the best, most impressive forecasts of the future was made by a group called the Club of Rome, using computer models at MIT to project that right about now, you see the horizontal axis goes out to the year 2100, and over here is the year 1900. So we are right about here, at which point there's a huge drop in world resources, followed by a huge increase in world pollution, followed by a consequential plunge in world population due to mass starvation, if not asphyxiation. Now this was difficult to refute in 1972, I guess it was, when this came out. But obviously, we did discover a few resources along the way that weren't known about back then, and I suppose we became a little more aware of the problems of pollution before it caused this huge spike leading to this huge collapse. So when you think back, you see progress in Moscow, Gum's department store. How many of you have been in Gum's, across from Red Square? And if you went there in 1991, you saw nothing on the shelves. And if you went there recently, you saw Ferraris parked out front and lingerie from Paris. The same is true of China. How many of you have walked Nanjing Road? Nanjing Road in China, you know, it's busy all day and all night. And you know, you have to just be amazed. One definition that I use of a developed country is the presence of Starbucks. So in Pudong, whoops, there is one of the world's largest Starbucks right there. And there was in Bloomberg an announcement that Starbucks is now going to be opening its first store in Vietnam, where they will have competition because an outfit called Highland Coffee is a direct copy of Starbucks, and the coffee isn't bad, and they sell nice souvenir mugs, and they all wear uniforms, and you feel like you're right at home. There's obviously a lot of cultural transfer going on in the world, and this is but, you know, just surprising. Who could have imagined in the early 70s? And convergence of economies. I don't want to dwell on every slide. I have a lot of slides, and I'll try to move quickly, but my message to you in the next several slides is that the developed world is saddled with several enormous problems. A couple of them are financial, and this chart shows, for example, on the top from the IMF, fiscal balance of advanced economies, and down at the bottom, public debt of advanced economies. You know, those are almost intractable problems, because this coming from PIMCO, that if you get in a very bad deficit position on your fiscal budget, it becomes very difficult to improve your position with respect to debt as a percentage of GDP. And the Bank for International Settlements did several forecasts out to the year 2040, and in those forecasts they show that while Greece has its own set of problems, so does the United States and the UK. United States. And you can't see who that is up there, and I forget, but I think it's Germany, France, and Japan. So, one last thing on this. The optimistic assumptions here are basically that, that you don't permit your retirees to live much past age 70. You just have to basically, you know, find a way around that. You send them off to some developing country to fend for themselves. Well, I mentioned there are two problems of the developed world. The third problem of the developed world is demographics. And so we're in this section now, we're going to talk about human capital, and we'll start off with some stuff on demographics with a picture of a little girl that I saw in Bangladesh in a slum section that's not even marked on a map. And you have to take a ferry, I'll show you a picture of the ferry, to get across to this slum section built out of corrugated metal shacks. And if you bring an old Polaroid camera, you take pictures of kids, and the film is expired, but it still works. And you give them pictures, you feel like the Pied Piper. They're pulling on your sleeve saying, please, please me. They're learning English. You know, there's how many students? There's something like 16.5 million students in the primary schools there, and this young lady is one of them. Wanted to say here, look at this. Population of India surpasses China approximately in the year 2030, and the population of Africa surpasses both of them. And so now we look at the demographic problems of the developed world. The green blobs are developed countries, and they have a lot of older people. The dependency ratio is a challenge. And then you look down at the bottom right, and you can see countries in the frontier in red triangles. And can you imagine running a country where 50% of the people are under age 15. I mean, some of you have households where that's the case, and you know that it gets crazy some days. However, we do know that those young people will be 10 years older in 10 years. And when you look at China and India, you compare two countries and consider that the productive workers are essentially in the middle. And for China, there are a lot of them. But for India, they have a problem down here. They have lots and lots of young people that are not part of the productive workforce, despite the absence of child labor laws. Fast forward to 2050. One-child policy in China, and the picture in China becomes quite unfavorable. And India looks pretty good. Here is Japan. It looks pretty bad, and it will be pretty bad. Here is United States. Not so bad now, not so bad later. Actually, a lot of that with young immigrants coming in to the U.S. Nigeria, big bad Nigeria. Big bad Nigeria, Lagos, a city of maybe 30 million people by now, and horrible pollution, horrible traffic congestion, and infant mortality. 19.5% of babies die before age 5. And fortunately, that statistic is coming down, but unfortunately, it adds to the problem, of course, of young people. But when you then fast forward to 2050, you can see that Nigeria potentially has a rich, deep, educated workforce. Here's Russia, bad today, bad tomorrow. I think the statistic, the life expectancy of males in Russia is about age 50, and they found that about a third of the males over age 50 who die are drunk at the time of their death. There are a couple of additional aspects to demographics that are worth our thinking about. One of them comes from the CIA and the military, which has found that a surplus of young males between age 15 and 24 often results in social instability. As a member of the baby boom generation, I can speak only for my cohorts who took over Columbia University in the late 1960s and did a lot of other things that in hindsight were somewhat crazy. And you can see this percentage, was quite high right around then. I did not burn my draft card, actually. I wound up on a submarine, but that was one way of coping. Get away from it all. Now look at this, and you wonder why Pakistan has problems. Look at that chart. The beauty of this set of data is that for every single country, it gets better. It gets better. All we have to do is make it through the next couple of years or get through this decade. It gets better. It gets better around the world. It gets better in Bangladesh and China. It gets better in Pakistan, even Rwanda. In Africa, it doesn't get better real quick because they have so many young people relative to the rest of the population. But I don't think it's going to be a big problem. So now that you've grasped that testosterone problem, let's talk about the mature workforce opportunity. And one of our clients at Speidell, Nicholas, has done this correlation of skilled workers relative to stock market performance. And his definition is you take the ratio of workers between ages 34 and, 35 and 49, and you divide, by the ratio, by the number 20 to 34. So when this is going up, you're getting more 35 to 49-year-olds relative to the younger ones that need training. If you happen to be under age 34, Simply being in this room, being in the presence of CFAs, means that you are experienced. But for general purposes, I think it's okay to use this. So look at Germany. You know, things start getting worse. You know, here in the U.S., things start getting worse. Look at Brazil. Things start getting better. And then look at the rest of the countries. A lot better. A lot better in Pakistan. A lot, even better in Kenya, South Africa down here, China. All these countries are going to benefit from having more experienced workers. So now I put it all together. This is the young people, 15 to 24. This is the dependency ratio, people who are younger than 15 and older than 65. And this is the experienced workers. So you can see in the developed countries, the blue lines start going down and the black line starts going up. And there's the United States, not quite so bad. And there is Ghana in the middle, and Greece on the right, and Germany doesn't look so good. But here is China, and you can see China's dependency ratio starts going up, India's does not, but both of them have a good ratio or change in the ratio of experienced workers. Here's Nigeria. We've got a lot of these, so I'll just go real quickly. Mauritius, you know, all these pictures look a lot alike because in the frontier, the demographics are a tailwind. Another tailwind, by the way, is urbanization, and I think, you know, that's sort of a granted or a given. And look at, here's Nigeria, urbanization. The saying, or at least it was said by GovCal Research, that worker productivity goes up tenfold when workers move from the farms to the city. Of course, that does require there be jobs in the city. Getting jobs in the city is a function of education. This is Strathmore University in Nairobi, and I've been privileged to talk there a couple of times, and their classroom is laid out just like Harvard Business School. It's like they took a tape measure, you know, they measured the whole thing, all the tiers, and the kids are bright, or the young adults there are bright, and their questions are challenging, and I think they're going to do well. We digress here for a minute. I found these charts in the New York Times, and I thought it was fascinating. How important is education? I think it was Conant at Harvard who said, if you think education is expensive, consider the cost of ignorance. On the horizontal, you have GDP per capita in 1909. And you see Argentina is slightly above the middle, almost the top third. And you see that Japan and Norway are down in the bottom third. The vertical axis is GDP per capita in 2001. And you see here that Argentina is in the bottom third, and Japan and Norway and, of course, Taiwan are in the top third. The author who did this contends that the effects of education are not just generational. It works out over a century. And therein lies a challenge for us in this country with our primary school problems. So here you have school enrollment in 1900. There's Argentina, very low. And here you have school enrollment in Japan, and Norway, of course, much higher. Well, so, you know, the good news in the frontier is you look at percent change in literacy. The high-income countries up 10% in 20 years. The least developed countries, literacy has gone up 30%. They've still got a ways to go. But it's a lot better than it was. You look at China, up 21% in 20 years, Brazil, 21 and 29. South Africa, unfortunately, has lagged, up 16%. It's not a bad number, but it's not up as much. And the point of this, I'll give you a commercial for a book. The book is The Better Angels of Our Nature by Steven Pinker, and I believe he's a professor at Harvard. The quote is from one of, I think, Lincoln's first inaugural address. And the point of the book is that he believes we are becoming more peaceful as measured by mankind in general. And one of the attributes that he highlights leading to peaceful behavior is better education. And he quotes from a study, and I know it's hard to read, so I won't go through all of it, but at the end he says, it increases people's confidence in their governments by showing that their government can at least get one thing right. You know, maybe they can't build roads or put in traffic lights, but literacy goes up. And down at the bottom, a part of the pacifying effect of education consists of giving people tools with which they can resolve disputes peacefully. Intuitively, that makes sense. I hope he's right. I told you I was going to share the little ferry boat story. This is the morning commute from that slum in Dhaka going to work. This is the ferry that I took in the opposite direction, where I encountered all those kids following me along. And obviously, this is not Coast Guard approved. I think this would probably not pass here in Seattle, but some of you can relate. Perhaps some of you do take the ferry to work. But the reason for this is we're developing this human capital with the concept of, okay, what do we have? We've got education, we've got lots of young people, we've got low wages. Look at how China's wages have gone up, how Vietnam's are still cheap, how Dhaka and Bangladesh is dirt cheap. Let's see. The tragedy of Latin America and of South Africa, here is the income share of the highest 10%. In South Africa, that income share exceeds 50% of all incomes earned in the country. And Colombia and Guatemala and Chile aren't much better. And this here is GDP per capita. So what you'd expect is as you get richer, you wouldn't see such extremes. Here's another, Gini index, where you're familiar with that. Here's another one. This is all, look at all of Latin America over here. It's comparing, it's the ratio of income or consumption, the highest versus the lowest. And you look at one of the problems of Latin America. Another book, Why Nations Fail, talks about the difference in colonization of Latin America compared to North America, with more egalitarian culture in North America. I love this. This is from Sharma's book, Breakout Nations, another good book about why some of the emerging countries are going to be truly great. But look at, in Russia, 29% of GDP is the relationship of the net worth of 100 billionaires to the total GDP of the country. Now, it's comparing apples and oranges because GDP is a flow and income wealth is an asset. But still, it's an interesting measure. And what I'm surprised by is India. 55 billionaires. Wealth equals 17% of GDP, where China, 115 billionaires, 4% of GDP. And their average net worth of these billionaires is paltry by comparison. Only $6 billion apiece, whereas in India, it's 48 billion apiece. So there you have it. We add this all up. Naturally, being CFAs, you know, we have to quantify these things. We add them all up, and so we come up here with the age, the ratio of skilled to unskilled, the percent urban, female literacy, I think is critical, the Gini ratios over here, and I can't remember what that is. Something and above. Oh, yeah, age 65 and above. That's what that is. So what countries look the best? Well, in this shaded color is emerging markets, Indonesia, Philippines. Here's Bangladesh, Vietnam, Pakistan. Here's Zimbabwe, lots of human capital. Kazakhstan, Croatia. Down at the bottom, there's Greece, Italy, Japan, Russia, UK, United States, not quite so good. So, investment. Gross capital formation. Guess who's up at the top? China, exceeded by Mongolia. India is not bad. United States is down here, down lower, but we've already built the interstate highway system. So what we would expect is that richer countries do not need so much capital formation. But look at Brazil. This blue line is Brazil. And that's not very good. That's one of Brazil's problems. This is from a McKinsey report. Investment in infrastructure as a percentage of GDP. China, India. Over here, Mexico and Brazil. Gross savings, well, of course, we all know China wins that race, and Brazil is quite low. And notice India has been improving. I love this data. Can you imagine a country called Moldova where 36% of electricity generated is lost? Lost! You know, maybe somebody, puts battery cables on the wires, and uses it to power their or charge up their Toyota Prius or something. I don't know. But here, interestingly, is Bangladesh, where it was high and has come down beautifully. So when you look at this, there's India, which is not terribly good. There's China, quite good. And there's an open circle around here somewhere, but I can't find it. Oh, well. So anyway, it's an interesting measure. So we add them all up, and we've got investment. And we've got some countries that are doing great: Mongolia, Vietnam, China, Bangladesh. Some in the middle here. United States, understandably lower. Down here is Greece. At the bottom, Cote d'Ivoire, but they just finished a civil war that lasted for 10 or 15 years, so maybe they'll get better. And now we come to government. And for this, I think that we need to recognize there is a framework to consider government. And it has several dimensions. I'm going to show you several ways of looking at it. One I happen to like is rule of law and chaos, where Russia, Indonesia, Pakistan are chaos. Rule of law, well, bureaucracy is pretty big in India. And Singapore, well, yeah, everything has a law governing it. And then bureaucracy down here, lots of bureaucracy. Countries can change. China went from down here to up there. But now we'll switch to another framework. And the framework that I really like is the Heritage Foundation, which ranks by 10 dimensions countries in terms of economic freedom. And if you run a trend line with GDP per capita, you find there's sort of a fit. And some countries are pretty poor. Argentina, pretty poor on economic freedom. Property rights alone put them down at the bottom of the list. China, not very good. Mauritius up at the top. Hong Kong, Singapore, US, yeah, kind of okay. Rwanda, trying to copy Singapore. And these are the dimensions. From the World Bank, ease of doing business. Their own measures for some of these others. Corruption from Transparency International. Labor freedom from the World Bank. Property rights, that's important. So put them all together. You've got a lot of frontier countries in blue, beginning with Mauritius, Estonia, Georgia, Lithuania, Qatar, Botswana, Jordan, Uruguay, that look pretty good. You've got some like, what do we have over there? Kenya and Nigeria. So Nigeria is one notch below India, but it's above China and it's above Russia. And so when you think about investing, if you think frontier is risky or dangerous, consider this, because the BRICS that we all love aren't so good themselves. And by the way, Greece used to be over in here, and in the new rankings, Greece wound up over here, and Brazil moved up over to there. Brazil may have moved up, but in 2007, it took approximately 150 days to start a new business. And through heroic effort, over 5 years, they cut red tape, and it now takes only 120 days in Brazil. So meanwhile, you've got Rwanda down here where it takes less than a day. You've got China where it takes maybe 40 days, South Africa down here, Mauritius down there, and all the developed countries, probably 2-3 days. I'll pass by that one. Let's see. Government as a percentage of GDP. Look at Brazil. Government is huge relative to GDP. So this is something that I think is a drag on growth. Now Denmark gets away from it, gets away with it. A lot of Scandinavian countries, everybody's happy. Government is reasonably efficient, I imagine. And yet in other countries, like good old Moldova, we can't say the same thing. In South Africa, they're a little too big. So, government scores. Here you are. You can add them up. Singapore, UAE, China, Germany, Austria, United States. Down at the bottom, no surprise, there's Ukraine, there's Uzbekistan, Zimbabwe. Total scores. Total scores, so we came up with some top-ranked countries across all 3 dimensions. China, Vietnam, Chile, Singapore, Hong Kong, and down at the bottom there's Greece. No surprise. Nigeria doesn't look too good there, actually. So the next thing I did is this. I said, let's estimate growth rates. We've got these scores. Let's look at recent growth rates and project future growth rates. But let's do one thing to it. If you take China growing at 8 or 9 or 10%, and you say China looks pretty good, because I think on the previous chart, China's right up there, you might add a point or two, and pretty soon China has GDP per capita that's 5 or 6 times the US. But I said, let's think about this for a minute, because the richer you get as a percentage of US GDP per capita, the harder it is to have a high growth rate. So, like it or not, here's what I did. I came up with a decay rate on the growth. So China has surpassed India and sooner or later surpasses Brazil, but then it starts to slow down, and China and Russia kind of end up on par. If you can follow this chart, this is 100%. That's US GDP per capita. And, you know, Japan sort of levels out down there, and these other countries, they all sort of catch up, and then by 2050, they've kind of stalled out. Now, if you projected another 100 years, good luck. Here we divide world GDP. I showed you this one before. But here's where the chickens come home to roost. Because we all are accustomed to portfolio allocations that dedicate a certain portion to developed countries and a certain portion to emerging markets, and if anything, a tiny portion to frontier. But how can you use that terminology in a world in which South Korea here has a 2050 GDP per capita that is greater than Canada, Germany, Finland, Ireland. Israel is richer than Japan, UK, New Zealand. Panama is, well, Czech Republic down there. Down there is France. How can we use asset allocation? How can we, at what point do we admit that the term emerging market and developed market ceases to be meaningful? And I would say that those who make that shift, that paradigm shift, sooner rather than later, will be the leaders in providing indexes or in portfolio management. Well, just to finish up the thought over here, let's see, whoops, who have we got over here? There's Portugal, there's Greece. Richer than Greece is Brazil, South Africa. Richer than Portugal is Mongolia, Thailand, Colombia, Bulgaria, all of these. So that's the world turned upside down. Which countries gain the greatest? Well, a lot of them in Africa. A lot of countries have opportunity for huge growth. Tanzania, Zambia, Cote d'Ivoire, Nigeria, Malawi, Ghana, and so forth. So I showed you a projection of world market cap in 2050, and if you thought it was a leap of faith to get to GDP growth and the decay rate of GDP growth, then you're sure to love this one. What I did here is I used a lot of data that the World Bank, the IFC, actually likes, where you take GDP per capita and you show market capitalization as a percent of GDP. The point being, as your economy gets richer, your stock market tends to be bigger. So a poor country can have a tiny stock market even relative to the size of its GDP per capita. Well, if you look at this, I will admit the T-stat on this trend line is not great. But I used it anyway, and I came up with huge compound returns for Tanzania and Uganda between now and the year 2050. And I'm putting my money where my mouth is. We own a bank in Tanzania called Community Rural Development Bank, CRDB, sells at about 3.7 times PE. And we own Swissport, which is a cargo handler, part of a global conglomerate, but locally listed, and pays a dividend yield of about 11.7%. So I'm hoping that some of you will agree and hasten to open your accounts in Tanzania. The wild card of culture. These charts come from the World Values Survey, and it may be that there is some truth to them, that percentage who trust people in general, with China at the top and the Nordic countries way, way up there, may have an economic advantage over countries where, like Brazil, people are a little more suspicious. You know, France, you know, I don't know if that's surprising to you, but you know, this says that in terms of trusting people in general, the French don't exactly rank up near the top. And so there are other ways of looking at it, and this is one of their notions. One of their notions is that at the beginning of a primitive society, you are very hierarchical, and you know, God, whatever kind of God you worship, is absolute ruler, and you respect authority, or the priests, or the leaders of the tribe. And then, as you move up, you start to learn about science, and you put more emphasis on money, but you're not happy. And so maybe this is the mentality of China's middle class today, or Hong Kong. But eventually, you move up and around to the right, and you become more liberal with a lot of things and start trusting people. So this is the idea. There's this loop. You know, the loop, and if you think of it going in this direction, the problem with some countries, we have Iraq over here, is that some of the Islamic world may be moving back in the opposite direction. So, you know, instead of moving up toward modernization, which is achievement, motivation, and then going over towards de-emphasis of authority and questioning authority and thinking for ourselves, it may be going the other way. I don't know. And so it's just a wild card. I thought this was interesting because some countries are happier than they have any right to be given their income level. And that would apply to Brazil, Argentina, and Uruguay. So this is subjective well-being vertically, and this is income horizontally. And it's no surprise that the countries in Eastern Europe were a lot happier before the end of communism. They were actually up here, and there's a chart that shows that they went bonk. Like suddenly doctors and physicians and so forth were driving taxis, and crooks were oligarchs, and they became, their world turned upside down. But you look at these countries and you do have to wonder, you know, about work ethic and motivation. So I think that is a factor not considered in a lot of this other stuff. Another factor is there's work done on veto points in governments that would say that some countries are stuck with weak coalition governments, multiple parties, multiple voices, and nothing gets done. And the best systems are one where there are 2 or 3 veto players or veto points that make the right balance. And this doesn't show it, but the worst, in addition to having either too many or is having too few. You remember Mahathir in Malaysia made some dreadful mistakes. You know, so if you have one person calling the shot. Well, you'll be glad to know we're almost near the end. The end is here. And the end is to simply say that what we're all after is we're all after life satisfaction. And the Pew Foundation proved that money buys happiness. They did a survey, are you satisfied with your life on a scale of 1 to 10? And they considered that you were satisfied if you gave them a number that was 7, 8, 9, or 10. We could debate that, but the result was 65% of people in the US that they surveyed were satisfied with their life. The other developed countries, I don't know which one that is, but the others were a little less satisfied than we are. And over here in red are the frontier countries, very poor and not very satisfied. Are you optimistic? Interesting. Shift the coefficient. What's positive becomes negative. Are you optimistic? Well, the US is a little bit more optimistic than the other developed countries. But if you want real optimism, go to Bangladesh or Kenya or Senegal or Mali for that matter, even South Africa. Pakistan we can kind of understand. The next question they asked, will your children be better off than you? Will your children live better than you? And in the United States, 68% of people said no. My children will not live better than me. It's harder for my children to buy a home than it was for me in the 70s to buy a home. And I don't know about my grandchildren and how they'll do. But down here is Japan. 90% of people in Japan said, no, my children will not live better than I. And here, China, Bangladesh. So we close with some exhibits of optimism, because I think that from a cultural standpoint, being optimistic is a motivational driver. And if you think you can move your chickens to market without a pickup truck, you'll do it. If you can get the tires across town without a pickup truck, you'll do it. If you can cross a bridge that barely exists, you'll do it. And you don't need an SUV with a family of 5. Getting recycling done, I mean, this is the green theme here, right? This is the green theme, you know, getting that stuff, you know, and, you know, getting an auto. So, yeah, I love that one. I can't believe it. I wouldn't want to drive next to it if he loses his balance, you know, or be a pedestrian on the sidewalk if he starts wobbling over a pothole. So does anyone recognize this waterfall? It's not the Victoria Falls. It's Iguazu, Do you know it? Anyone been there? Anyone? Yes. So it's on the border of Brazil and Argentina and Paraguay, and it's the most magical place. If the movie The Mission with Robert De Niro was filmed in that area, it's the most magical place. And I think a rainbow is a good place to end, except for this. This is a picture I took in Beirut after I went jogging past the new Four Seasons Hotel, past the Hard Rock Cafe, past my favorite Starbucks on the Corniche, where people are fishing in the blue Mediterranean, and up, and I found this, and I thought the message was good. Probably the best graffiti I've ever seen. So, thank you. I hope that it's been provocative, if not helpful. Maybe helpful. But anyway, it is what it is, and I've had fun presenting it, and I thank you for your time. And if anyone is still awake, and if anyone has a question about any of the particular data points, and you want to really drill down on them or anything. Anyone have a question? Yes, sir.
You mentioned, repeat the question.
He said, don't take any questions, especially from that guy. No, no, he didn't say that, no. He said to repeat your question, so I'll try to.
You mentioned that over 50% of your investments were in frontier markets, or frontier and emerging, I forget the exact.
Frontier, yeah.
Which, you know, you've given us a lot of data, but which are the markets that you think over the next 10 years, not 50, 2050, the next 10 years, will be the most promising potential?
Well, let me step back a little here, because in our firm, all we do is frontier markets. And personally, 50% is the number, because my wife is a little more diversification oriented, shall we say, which is a good thing. We make a good couple. So then the question is, you know, if I were to look around the world, and I don't have the answer in my head, so I'm going to work through a few things. I think Vietnam is conceptually appealing and the people are wonderful, but the government is so awful and the structure of the companies is so bizarre that no company has a single focus. And they all own a bank and a real estate developer and a tungsten mine or something. It's nuts. So that doesn't make the list. And Nigeria is great and popular, and it went up 60% last year and another 15% in the first quarter. But maybe it's too easy for emerging market funds to dabble in Nigeria because the liquidity is there. And I like it long term. I think it's going to be huge, but I maybe not say that would be my favorite. So what would I then say? We look around and we look at a lot of unsavory places, and we apply some discount for that. So I've been in northern Iraq and in Kurdistan, which is fortunately a little safer than Baghdad, and met with companies. And the recent offering of AsiaCell doubled the size of the stock market, and it was done, underwritten by a local broker. And so there's huge potential. I just can't say whether that's going to work out given the geopolitical forces at work among its neighbors. So I come back to Africa, which I love, and I say that I think Zimbabwe is going to be great. And I would definitely put some money in Zimbabwe. And you can buy interesting stocks cheap. If you want a bank, buy CBZ at 1.9 times earnings. Okay, you know, 0.4 times book value. Maybe they have some bad loans. Maybe. But you know, they seem to feel they have a good grip on it. But Dairy Board, you can buy a dairy company where milk consumption in the country went from 20 liters per capita per year down to 8 during the hyperinflation. And now it's coming back. And this is a company that bought and imported 250 pregnant heifers from South Africa that have given birth in the first quarter. They brought them in last September, and they are increasing the milk supply, of the raw milk supply, 25% in the whole country. I think that's so wonderful. And the stock's trading at about 7.5 times earnings. but enough of Zimbabwe because there are some uncertainties politically. How about Ghana? Good democratic process. Stock market's up a little bit lately, but it's the friendliest country that you'll ever hope to visit. Just wonderful, wonderful people. And a lot of fine companies, the banks especially. Well, I could go on, but there's a lot to like out there. So there are a couple of countries, Zim and Ghana, that sort of balance one another. So, thanks. Thanks for asking. Is there another question from anyone? Yes, in the back.
I have a question about just, I guess, the logistics of getting access to these markets, and liquidity is a challenge.
Yep.
Can you talk a little bit more about that?
So the question is about access to these markets. Gaining access and liquidity is a challenge. Well, I don't know if you ever read the book by Jim Rogers called Investment Biker. But he's a classmate of mine from Yale, and he got a motorcycle, and he got a girlfriend to follow him on another motorcycle. And they got BMW motorcycles so they wouldn't break down. And at the end of the trip, he went around the world. He went across Asia all the way out to Japan, across China and Siberia and Manchuria and Mongolia, and then he went down through Africa across the Sahara, and then he went down through Latin America, and by the time he was done, he didn't have a girlfriend anymore. But he'd bought stock in a lot of those little markets, because if you show up, you can open an account. So the first thing is, we should run a travel agency. We should do investment tours or something. But go there and see firsthand and open an account. The other side of it is that it is a little bit challenging to open an account, and that's why we do some commingled funds for LPs that make it easy. We don't have the complexity of mutual funds with daily redemptions or whatever, and we've been able to, by having a commingled fund, make it so that each customer doesn't have to open 30 separate accounts. But part of your question was on liquidity, and the good news is that in terms of liquidity, there's about $1.5 billion a day of trading volume in these markets. I mean, if you exclude the GCC, it drops by maybe half, 2/3 actually. But there's a lot of trading volume in these markets. It doesn't necessarily mean that the most attractive stocks are the ones that have the trading volume. And I think there's huge opportunity for a CFA because local investors have somewhat peculiar rituals. They love bonus shares, for example, and they love stock splits. We had a company in Sri Lanka that was trading at 171, and it split 2-for-1 on the 8th of December. This was in 2008, and it split 2-for-1. 171 is split 2-for-1. By the end of the month, it was trading at 141. So let me think there, divide by 2, and yeah. Well, so mathematics is not widely understood. And the other thing, we had a rights offer in the Bank of Benin, BOA Benin, that trades in Abidjan and Cote d'Ivoire. And the rights offer was at 46,000. The stock was trading, the stock was trading at 46,000. The rights offer was at 42,000. You could buy the rights in the market and book a 4,000 point profit because the stock never traded down to 42. So anyway, good question, important one. Is there, I know we're getting late. Anyone else have a last question? Okay. I thought I got off easy. I hope it's easy. Easy question?
Yes, softball.
Oh, okay. Yeah. That is a that is a very nice question. It actually is a controversial question. But many of us remember the image of the ugly American, and China is not exempt from that taint. And part of it is self-inflicted. And you need only look at some of the lessons China has learned. In Myanmar recently, they were kicked out partway through a dam project because the government realized they needed to cater to the local people living in the shadow of that dam project. And, well, China be damned. So I guess my take is that China has done more good than harm by a long shot. But of course, a lot of media attention is focused on their failures, and they've had plenty of those. But when it comes to who benefits versus who doesn't, by and large, everybody in Africa has by now opened up to China. And not only that, but India is starting to get jealous. So India is starting to play a part as well. But thanks for the question. Thanks to all of you. Thanks for your time. If anyone would like the slides, give me your business card. I'd be happy to send a set to you. Thanks again.
Thank you.